Welcome to Building Better Business by the Numbers. I am your host, Despina.
And I'm Theo.
We're certified accountants. I run a couple of businesses myself, and we're here to guide you to build a business that actually works for you rather than against you. Each episode will break down the numbers, the strategies, and the systems to building a profitable business simply and practically. So if you're ready to build smarter, scale faster, and create freedom through your business, you're in the right place. Let's get into it.
So in this episode, we were talking about the 9 habits that are keeping business owners poor.
And these are probably habits that you have been doing over and over and haven't realized that you are doing them. So let's break them down in this episode and get you out of the poor cycle. So the first one is probably the biggest one, and that is not paying yourself a wage at all. The biggest cost to not paying yourself is never having any money left over for yourself. So if you're always thinking of yourself as the afterthought, you're never going to have money in your personal pocket. So it's going to feel like your business is never actually paying you. There is this common misconception as well that what the business makes is also what you make. And so if you're making $1 million, you're like, oh, I'm a millionaire. Well, it doesn't work that way because your business makes the money and you're completely separate from the business. So the first one is you're not paying yourself anything fixed. But then the second one is that you're crossing personal and business together. So there's no clear separation between what is the business's and what is yours, which again, keeps you poor. It keeps you broke because you've got no clarity on what's yours and what's the business's.
It stops you from having any kind of control of business spending as well as your personal spending. You can look at something in your business and think, okay, well, if I buy this for the business, I can't afford my food for this week. It ends up restricting your ability to control what you can spend on yourself and stopping control for what you can spend on your business as well. So you'll sit there and it'll restrict you from spending on your groceries. It'll restrict you from spending on things that your business needs, whether it be new software, new computers, new anything that you need. It makes you second guess yourself a lot and gives you a lot less control over what you can and can't buy.
Yeah, 100%. And I think the other thing to note here is that just because you are a part of the business doesn't mean that your groceries are also a part of a business expense. And I think this is what we see a lot in the financials is directors and owners drawing down, thinking that they can tax deduct it because it's tax deductible, but when in fact it's absolutely not, and it then affects the bottom dollar. All of a sudden, where you think you've actually been able to maximize a deduction somewhere, you've actually shot yourself in the foot and you've got tax to pay on monies that you've already spent. So there is that catch as well when it comes to the crossing of your business and your personal finances. And when you separate them, all of a sudden you'll feel a sense of freedom and relief because you've actually got money to spend in your personal life and build your investments in your personal life as well as build your investments in your business. So stop doing that. It's so povo. The third key thing that keeps business owners poor is undercharging their services and thinking that they're doing that and they're being competitive by undercharging. If you do not understand what it takes to run your business and you're charging out without the financial understanding of what drives your business. So if it costs you $20,000 to run your business and you're only bringing in $15,000 because you're trying to be competitive with your prices, then you're going to constantly be on the back foot. You're shooting yourself in the foot by not costing everything accordingly and then adding profit on top. So undercharging might get you the sales, but it doesn't necessarily mean that you've got a successful business because you have nothing left in that account for you to actually grow your business.
Yeah, 100%. And then from there, in undercharging, it can take away the value of the service you provide. Even though other businesses for a similar service can charge something for what they're giving, sometimes a business owner wants to give more value to the client. And in giving more value, that more value then deserves more profit and more charge, and so you increase your charges to meet that need. Then again, not all services are the same. Sure, competitors in similar fields can offer something for this price, but the nature of how they conduct business can be very different to the nature and how you conduct businesses, especially niche nuances, things like that. Just a lot of variables are in play there.
And unless you see someone's financial position, you cannot say that they're doing it right or wrong.
100%.
You have to be driven by what's right for you and your business rather than going off what your competitors are doing. Like, you do your market research, sure, take a look at what the market is doing, but also look at what you could do better. And as you said, create and build value from that, because value doesn't equate to doing more. Value equates to being and doing things with more value tied to it. So that might be that you are this specialist in this certain area that only focuses on this. So you're way more valuable than the person who doesn't understand that niche or whatever it is. So it just depends on what you're doing, right?
Yeah,
and how you're going to differentiate your services and be more valuable to your clients and your customers.
Yeah, 100%.
So the fourth one is saying yes to every job or everyone that comes through. And there are so many issues with this, because I know when you're in startup especially, you want to say yes to people, you don't want to turn them away, but those people might not actually align with what it is that your business does. I think when you're in startup, the hardest thing is that you want to say yes to everyone because you're growing your business and you want to make sure that you're serving as many people as possible. But what ends up happening there is that time spent doing jobs that actually don't align to your business's goals, mission, vision will end up draining your time and energy and your money faster than if you just focused on that one demographic or service or whatever it is that you want to focus on. So saying yes doesn't necessarily mean that it's going to push you into a better financial position.
Yeah, definitely. And to build up from that, another thing to consider is in taking so much work in, when you're in a service-based industry, when you have such dense amounts of work to be done, it can slowly drain away the value of what you are providing. As you have more and more work, when it becomes too much, your quality and your standards start to drop slowly as well. So say when you're overburdened and now you're just trying to get things out the door, the quality of the service you're providing isn't the same as what it used to be, and that can really ruin your reputation and what people see you as in general.
Look, I honestly have to say most business owners that I've spoken to, myself included, we've been there. We've been there where you feel so stretched at capacity. You're saying yes to everything and everyone because you don't want to disappoint anyone, and all you end up doing is disappointing those people because you've put too much on your plate. And your eyes are bigger than your stomach. It's like going to a buffet.
Yeah. You put too much on your plate.
Put too much on your plate.
Yeah.
And then you end up, not being able to actually do the work that you're proud of. And then that ends up with more disappointed people because of the fact that you've just overcommitted. So there's nothing wrong with saying no to something if it doesn't align. I know we want to help everyone. I know that, you might see the dollar signs and go, I can just do one more thing. Think about how you're going to feel and the end result and your end result, and will it take more from you? And more times than not, it's going to take more from you, because then this leads into the fifth issue, which is you hire reactively. You are reacting to this issue that you have now created in saying yes to everyone, and so now you've got to react and hire. 100%. You're like, oh God, and so you start to think about, okay, how can I make this better? And so you hire someone. And then that's taking from your profits, right? You've hired someone without any real indication of what they're going to do, just in the hope that they're going to take work from you.
100%.
And so if you don't have a plan in place for them, if you don't have a clear job of what they're responsible for, that reactive hire is going to drain your bank account quicker than anything else. And then you're going to have a negative association to hiring people.
Yeah, 100%.
And it becomes this vicious cycle of never wanting to hire again, because if you scale and grow, you're going to have a people problem and you're going to have a money problem, and it just becomes very negative. Doesn't have to be that way. So reacting to a hire, see how it all feeds off each other.
100%.
It honestly is just one cause then ends up being another problem.
Just a big circle of issues that just keep spiraling and snowballing and just making it harder to kind of stay active and keep the business going and keep it profitable, really.
Yeah, business is fun. It's a game. At the end of the day, it's a game, and the game is to win. Yeah. And if we constantly thinking about how we're going to get ourselves there faster and with the least amount of pain. We got to think about all the things that are draining it first. So
we kind of discussed an issue in there being not focusing on one thing well. So it falls into that theme of both quality and actual work type being done. So if you sit there and you start bringing in a bunch of different things, you lose your ability to focus on the one thing that you're good at, where a lot of business owners will sit there and they have their niche.
Yeah.
They have something that they excel at better than anyone, whether it's marketing or whether it's their kind of influence on socials or whether it's the quality they provide.
yeah.
The more burden falls on you, the less you're able to keep doing what you're doing well.
Yeah, 100%. And focus is the hardest thing because it's shiny object syndrome, right? You want to go chase the next shiny thing. And you think that's going to be the driver to you making more money is chasing that next thing. You're like, oh, well, this didn't work. No, you didn't spend enough time focusing on that one thing. And guess what? Focus is boring. It's so boring. You have to sit there and think and think and think. And you get really, really bored about this one thing. But then all of a sudden you become the expert in that one thing. And guess what happens when you become the expert in that one thing? People pay you so much more for being the expert in that one thing because you have dedicated your time, effort, and energy into that one thing. Focus is the one thing that most entrepreneurs lack. I swear we all have ADHD. That's why we do this thing, because it's for crazy people who just run off caffeine and just try and get this all done. But focus is what's going to differentiate you from just getting by to succeeding and having a business that you're like, shit. And that's why they say, actually, boring businesses are the ones that often do the best because no one wants to be in boring businesses.
Yeah, so
because it's too boring.
100%. Yeah,
everyone thinks we're boring as accountants, but I think we're a hoot.
I think we're pretty fun.
I think we're very fun.
Yeah, the boring businesses.
The boring businesses. But it's true. You see the laundromats; they do the best. You know,
amazing, yeah.
like car washes, just things that are super boring. Accounting's boring, but it's a necessity. Anything that's a necessity is always going to outwin, in my opinion.
Yeah, definitely.
So focus and don't be afraid of doing boring work. That's, yeah. So that was number 6.
Yeah. I guess we can lead that into a little bit of ego-driven business.
Yeah.
So not making the mistake of driving your business with just your ego and actually thinking about what you're doing and planning it out.
The amount of times people go, I just go off my gut. If you go off your gut every single time, you won't have a business. Your gut is not telling you, maybe it's a mix. Like your gut doesn't know if your financial position is good or bad. If you just are constantly making decisions based on your gut, you're not going to have any money left in your account. Because my gut tells me to buy a Chanel handbag every single day. If I did that every single day, I would have no money. Yeah. Because I'm driven from what my gut is telling me. Well, my intuition is telling me I need a Rolex. No. I want it.
Doesn't mean I need it.
It doesn't mean I need it. It doesn't mean that I'm like the ego. And again, this is probably like an extremely good one to kind of correlate to in terms of ego is when you're looking at everyone else and they're putting on a facade and they're wearing the fancy clothes, they're wearing everything, and all of a sudden you're assuming that they're doing better than you. So you need to dress the same way in order to keep up with the Joneses. Again, don't let ego drive the decisions you make for your business and for yourself because it's only going to set you back.
100%.
You know, no one will see the 10 years plus that it's taken you to get to this point. And I think that's what I would like, especially if you're in more infancy in your business right now, stop looking at what people have done and it's taken them 10, 15, 20 years to achieve. Take a look at what's going to get you the furthest in the next 12 months and keep pushing from there. Stop looking at the shiny thing and going, well, my ego's telling, like your ego cannot be the driver to the decisions that you make. I guess, just to sum up on that, you should be listening to your data, not your gut.
Or
data,
mixing them both.
Yeah.
Yeah, they're both important things. But
I think if we're again, gut isn't directly correlated to ego, but if your ego can get in the way with potentially let's use the people analogy, for example, like you're going to hire. And if you've got a big ego and you don't want to admit that you're wrong in something, and then all of a sudden you just continue to keep this person on, even though you know you're wrong, but it's just your ego won't allow you to let it go, you're going to cause a lot more havoc and create a mess in your business if you're not addressing that and you're letting your ego just drive that. So I think ego comes in play for a lot of different factors, and it's just understanding what that looks like and how to navigate it. And the more you know about yourself, and the more you can kind of like introspectively look at yourself and go, okay, what am I doing? Because at the end of the day, as leaders, you need to be able to look inwards and go, how did I fuck up? It's no one else's problem. You're the boss, you're the leader here. And if something's not happening in your business, it's because you're not doing it. It's because you're not driving it. And you're letting your ego dictate everything because you already think you're the best, but you're not. You have to look inwards and go, I fucked up somewhere along the lines. How can I fix this?
Where do I get better?
Where do I get better? And you know better than anyone. I sit there and I'm constantly like, how can I be better? How can I do better? What have I done?
And not only that, you also bring in to help mitigate. You don't just try to find the solution yourself. You look everywhere.
Constantly.
It's whether it be from external sources, from mentors, or even from your own staff. It's an open-ended discussion. It's not just something that you look at entirely yourself. It's factors from everywhere, and you look at those factors and you bring in outside opinions and you look at your data. It's not just an internal thought that you'll come in mindlessly and this will definitely fix it. Take it.
No, it's constant iteration and listening to the people around you, because you might think that a decision is a good one, but someone else might have a better perspective on it, because guess what? They're doing it day in, day out, and you're not. So it's coming in and being like, I don't know. And you don't know what you don't know. So 100%. Putting yourself down onto the pedestal of going like, not actually putting yourself down, although I'm pretty good at that. But taking yourself back down onto the level of everyone else. What if I'm walking in as a customer, if I'm a staff member, how would this feel? How would this look? How can I be better for all of these people? Be a good leader, don't be a dick. It's just be as simple as Then we head into the 8th one. And the 8th one is micromanaging, which again leads off ego. So if you've got an ego and you think things are supposed to be done a certain way, you're going to automatically pretty much micromanage. So you've hired someone to do a task, and then all of a sudden you're redoing that task because you're not managing the situation.
The purpose of hiring is to reduce a lot of your constraints on time, and then to free up your time to then take on other tasks that are higher value, or just to enjoy your freer time. In micromanaging, you will lose that benefit as a whole, and the point of the hire is gone. You want them to control the work. You want them to look after that obligation so that you don't have to. If their work is not up to standard, train them, guide them, and influence them to get to where you want to be. Don't sit there and complain about it and then do the work yourself anyway. Otherwise, you're hemorrhaging money on a staff wage, on their super, on their tax, for no benefit at all, and realistically probably taking you more time to deal with. Otherwise, what's the point?
There is no point. If you're constantly going to go into your business and go, well, I can just do it better myself, I'm going to do it. Then you can you can be a solopreneur, you can just do what the work is that you can do. Don't go ahead and build a business and hire people. If you're always going to be constrained by that thought process. And mindset in this is everything as well, because you do have to let go of control. Control is probably the hardest thing. But if you give someone, you hire them and you give them the task and you say, this is your role, and they are A players, trust me when I say they will take that role and create it into something you couldn't have even dreamed of it to be. They will turn it into something that you will like, I'm so glad I just released that control, because look at what they can create. You have to have trust in the people that you hire.
And if their processes change, that's fine. They'll find a way to play to their strengths. They will find a way to use what they're good at and implement it into the business in a way that, again, like you said, in a way that you could have never thought of, because they have a different skill set, and they will bring that skill set to the table if you let them.
They also have a different perspective. And remember, a lot of these people are coming and have worked in other places. So they're coming in with a different view on how things happen. So in a different workplace, there's different processes. So they might bring those processes into the company. And that's been apparent in our business at the moment. The firm has been doing really well, and we've changed a lot, and it has been difficult, but it's been great because of the fact that we trusted that these other people have come in with their set of expertise and were able to then create and fill the gaps that were missing.
Yeah.
And that's why they were hired. They weren't hired because sure, they're there to do a job in certain respect, but they weren't hired to necessarily fix a problem. They were there to expand the business.
Yeah.
So this, again, you're going right back to reactive hiring. So if you're hiring someone to help you expand the business, that's exactly what they should be doing, is expanding. And that goes across the board of everyone.
Yeah.
Whether you're in our situation, whether it's another accountant, an admin, a manager, all of those people are there to expand your business. So micromanaging that you'll consistently hit income ceilings. You're going to consistently cap out, and the bottleneck of the business will always be you. You will always be the bottleneck.
And you'll hate yourself because
Yeah.
you've got nothing better what
Yeah,
you're doing all day.
honestly, and then you're just sitting there
working.
like you're working nonstop, and you're going, I'm paying all these people, and you have this resentment to them,
Yeah.
and it just becomes toxic, and all of a sudden,
No one wants to work for you.
you feed the culture of your business,
Yeah.
and if you're bringing in toxicity, then guess what? Your business becomes a toxic landmine. People won't want to work for you anymore because it's just toxic, and the way that you behave ripples on to all of your staff. So stop micromanaging, let go of your ego, and stop hiring reactively. And that leads us to the last one, which is reinvesting. Reinvesting in your business. Oh my gosh, I have heard this one so many times. I'm not going to pay myself because I'm reinvesting in my business. How are you reinvesting? Oh, I just keep buying materials and supplies and product. Okay, so how is that making you more money right now? Oh, I don't know, but if I just keep doing this, I'm going to make more money.
Yeah.
If reinvesting means that you are investing in the business, which means that there is a direct tie to return on investment. And a good ROI should be 2 to 3 times what you've invested in. So if you've gone out and purchased plant and, machinery to do a job or whatever it is, and you can pop a person in there and it costs you $100,000 to run and operate that, and then you've gone out and gotten a job and you've made $300,000 from that, guess what? That's reinvesting. You've done it right. You've pretty much
100%.
gotten your return on investment. Reinvesting doesn't mean that you just keep spending money in your business. That's just spending money in your business and draining your profits. So reinvesting is having a clear plan on what your money is doing for you and how your money is going to then make you more money. So you can reinvest in people, reinvest in plant, products. If you're in retail, you're purchasing different merchandise or whatever, but then if it's not working, cut it.
Get rid of it.
Get rid of it. Stop holding on to the hope that maybe one day it might sell or one day it might do this. Sometimes you just got to cut your losses and move on. To go over the 9 habits that are keeping you poor, we've got the first one, that is you're not paying yourself. The second one, which is that you are mixing your business and your personal money. Third one is undercharging because you're trying to stay competitive. The fourth one is reactively hiring. The fifth one is saying yes to everyone.
The sixth one is not focusing on one thing well and
Yep.
kind of just spanning out and doing too much at once. Yeah. The seventh being letting ego drive your decisions. The eighth, not letting your staff be staff and micromanaging everything they do. And the last one being reinvesting in your business and not doing it properly.
Yeah. Reinvesting and then telling your accountant that you've reinvested, and we're like, well, you didn't make any money on it.
Yeah. Your Rolex is
your Rolex isn't an investment.
Yeah.
Your Chanel bag, unfortunately. Even if you've taken a photo of it on Instagram, I'm sorry.